Hey guys, good evening everybody. Welcome to another edition of the AccessTrader.com weekend update show. Hope everybody is having a good weekend. Crappy weather in the Northeast. We've had freezing rain, freezing snow, and yes, it's just straight up freezing considering how nice it was on Thursday going to Friday with 60 degrees and then followed up by a foot of snow. So hopefully everybody, all our friends on the Northeast are warm and safe and most importantly, happy, right? As long as you got that smile on your face, everything is all good. So let's get into the market. So, again, S&P continues its post-election romp, right? Best way to say it. We're still kind of in the honeymoon stage. S&P, again, all-time high. The Dow is up, a percentage point, 1% across the board. The S&P for the week was up about 1%, and NASDAQ just a tad over that 1% threshold, but very, very strong performance. And the one thing that, again, we continue to talk about is when is the shoe going to drop, right? Eventually, again, all good markets eventually come to a pause, and then the next thing you know, in the game of musical chairs, eventually you lose that chair. And it's not coming from a bearish point of view. I am an internal optimist, okay? I love a bull market, okay? I embrace a good market. I love how a bull market feels. I love how a good market makes everybody feel, just market sentiment in general. So this is not coming from a bearish point of view or a frustrated bear. This is coming from a person who's been trading a pretty decent amount of time and have seen a lot of really good markets. And what happens, well, when you kind of look away and they kind of really pull the plug. So it really, really is amazing in how frustrated the bears are. And they keep on throwing all these different, different theories and all these different theses. And the most important part of any theory, any opinion is, well, the final tally, the scoreboard. And the scoreboard says we are at 2,300 plus on the S&P 500 until the bears really get their teeth in and make a stand below the 50-day moving average. You have nothing to talk about, right? You really have nothing to talk about. It could come at any time, sure. Again, the market's never as good as you think, and the market's never as bad as you think. The market kind of plays itself out and kind of aligns the universe accordingly. So don't think the market is going to stay like this forever. Until it does change, it's a pretty good solid tape. The only problem is, again, that we say in this problem, in this really strong tape, is not every single day is tradable. It's just not. You can have 2 good days and you can have 3 slow days. You can have 3 good days and you can have 2 slow days. And you can have a lot of combinations within those 5 trading days. But the most important part is don't deviate from your comfort zone. Don't deviate from your process, and don't deviate from the area of common sense just because the market's open. That means you have the right to place bets. And again, of course, you all have rights to place bets. But again, placing bets and placing bets properly are completely 2 different things. And one of the best things that we talk about is a market that is tradable versus a market that is trending. And a trending market is usually very, very good for swing traders. A violent market, an irrational market, an expanded range market is obviously more facilitated for the intraday cash flow traders. I try to think of myself kind of as a combination of both. For years and years and years, and you guys know this, I was just pretty much 90% swing, and now I'm pretty much 90% day. And again, when there is inventory, there's inventory. I manage that inventory, and the difference between trading and trending are a world apart. And again, if you're a swing trader, it's very, very tough for you to swallow the concept of day trading. If you're a day trader, it's very, very tough sometimes to swallow the concept of swing trading, because everybody wants to hold the stock forever until the stock goes against them, and then they don't want to be in that stock anymore. Right? It's not that much fun. But this is kind of where we are right now. It's kind of the new reality. And, you have new groups coming up. You have different rotation into money flow. You have financials continue to be strong. Everybody's still trying to figure out how the whole new SIFI and the whole deregulation is all going to play, and whether Dodd-Frank is going to be completely off the table. All these things, all these things are playing to the financials. But right now, the financials are definitely the horse that is guiding the bull market. I mean, look at Goldman Sachs. I mean, Goldman Sachs has just been a monster. You got Bank of America. You can go through the whole list. I mean, you can go through the whole list. Bank of America has been very, very strong. On and on and on. Mixed bag again, and this is kind of what we talk about. The market has a very long memory, right, guys? We say this all the time. It's not a very interesting market. When you talk about markets repeating themselves, it's the truth, and it's kind of a copycat, right? You guys hear this theory of a whole copycats in baseball, right? There was no such thing as a closer in the 1970s, 1980s. All of a sudden, somebody came up with a specific person who's going to come in the ninth inning and kind of close out the game, and then the whole league, right? The whole league started getting individual specialized closers, and now everybody has a closer, right? And trading is the same thing. Trading, once one group starts doing one thing, right, they all kind of start to follow. And this is kind of where you start going into the fangs, right? You start going into fangs. So we had this big run up, right? We had this big run up on Amazon, for example, right? And then they kind of disappointed, right? And it wasn't because they disappointed. It's because, well, the stock rallied from 746 all the way to 743, almost 100 points in about a couple of months. Of course, the stock is going to get sold into earnings, right? And then you got Google. Was Google really that horrible, right? And we'll talk about Google and Amazon in a few minutes going into this week. But was Google really that horrible? No, but the stock rallied from 743, to 867, over 120 points. You had the same thing with Facebook. Everybody's talking about, wow, Facebook really wasn't that great. Look at Facebook, what it did, right? You had Facebook just in January going from 114, 114 to 135, had a little bit of a hiccup on earnings and started going back higher again. And then we got into NVIDIA. And NVIDIA played out exactly the same way. NVIDIA kind of played out the same way. The stock was up after hours, and then went down after hours, and then it went up the next morning, and then it got crushed in the day. But again, the stock has gone from 60. The stock has doubled. Okay, stock has doubled since the middle of November. How can you possibly even make a statement if the earnings were bad or good? They're holding up. They're all holding up. So it's kind of a very boring, methodical way the market kind of operates. But once something in a group does well, they all kind of do well. And something in the group, or just group biased, right? And this is kind of group bias, especially with sentiment traders. Once they do something, that one doesn't like, well, they kind of all go the same. So everybody now is looking for Tesla and saying this as well. Tesla, look at the run Tesla's had. And by the way, Tesla, again, continues to be just again, my favorite trading vehicle by far. There's nothing even close to Tesla. We've been doing just incredibly well over the last several years on Tesla, both sides of the market, but especially this whole run up, man. We've caught the stock many times. Just a great combination. It's like a quote unquote, whatever your favorite high performance car vehicle is, Porsche, whatever it is. It's the kind of, again, I say it all the time, it really is the combination of speed and power, pun intended, because of what they actually do. But again, everybody's betting against them. Okay, Tesla can't succeed. Tesla can't succeed. Look at this garbage. Tesla, such a hated, misguided stock. I really hope they really, really take it to the naysayers, because this is a technology company masquerading in a car company's body. And again, listen, this will be played out as such, and that's why hopefully Tesla will do well in the future. And again, who knows what happens to the stock price after come out earnings? Again, a lot of people believe in the whole theory. Well, if the rest of the group went down on earnings, why isn't Tesla? And maybe it could. Tesla's gone from 180, almost up 100 points, so 90 points move since December. So, can they pull in there during earnings? Sure, absolutely. But again, it's not our job to figure out, place bets on the what if, on the X, on the unknown. So we make adjustments and we play accordingly. Okay week, a little bit on the slow side. I grinded it out pretty much every day. I did have one day that I didn't make any money. I did have one day out of the 5 that I didn't make any money. It was just slower, because again, we couldn't get, at least I couldn't get, I trade a lot of beta, right? I trade a lot of beta, and even though I did okay for the week, it wasn't anything signature. Like, it wasn't like I sat there and really, knocked the cover of the board, because it was tough. When you look at, the beta names for the week, only like Amazon, Amazon was a good trade. Like, we talked about levels, stocks trading at levels, and Amazon was a good trade Thursday, Wednesday, was it Wednesday to Thursday? Was it Thursday to Friday? I think it was Thursday into Friday. Like, Amazon was a really good trade from that 820 level, which we talked about right here, to the 825 level perfectly, and actually reclaimed this area, and I really like it going into this week. That was a good move. 5 points was a really good move. Google, ever since it kind of missed their numbers, it's been a really good trader. I caught it several times off this bottom. Friday, I caught it for like a $2 move as well. But again, when you have such tight ranges, and if you look at the rest of the ranges, you really look at the rest of the ranges on Netflix, and you look at the rest of the ranges on the rest of the group, like Facebook, and there were Alibaba, that they were really, really tight. Apple, very, very tight. So you couldn't get a really good power move this week. But it was okay. Listen, again, I say this all the time to everybody in the live webinar. Look, let your worst week, I mean, your absolutely worst week of trading be a profitable one. Okay, look, you can have weeks that you're gonna knock the cover out of the ball. You can have weeks that are gonna just completely mind fuck you. Excuse my French, but that's what it is. You're not gonna be able to figure anything out, and you're gonna have slower weeks that you're profitable, and you have to take it all in, right? You have to take it all in. You have to embrace it all. And again, as long as you're solid, as long as you're not breaking any of your personal rules or breaking or deviating from any of your very, very specific, guidelines, you're going to be good. And again, a little bit of a slower week for me, but I did have one losing trading day this week. But the rest of the 4, I grinded it out, and Friday was fine. Friday was fine. We had some, about five or six pivots in the room, nothing crazy, but they were pretty good. They were pretty good. So let's talk about it really, really quickly, and then we will go on to go into the new week. So yeah, so Google, we talked about this pre-market, guys, and this is why I always tell everybody, get to morning strategy. Get to morning strategy at 9 a.m. If you come in like at 9:20, you're pretty much catching the end of it, and you're just pretty much catching, what we have off the watch list for the next day. Come in early, especially if you trade the high beta. And again, not everybody in the room trades high beta, but if you do trade high beta, we usually talk about that within the first like 10 minutes or so, kind of get your ducks in a row. So yeah, we talked about Google. Again, if you believe in the theory that stocks go from supply to supply, we talked about this range right here, this 834 range. That's where I bought it. The stock just sat there for the first like 3 minutes and then just took off and traded right to supply. So nice trade. I mean, nice trade on Google to kind of end the week. That was nice. The Amazon trade from the other day was pretty nice. I mean, 5 points is still 5 points. I don't care how you slice it, but that was fine as well. Let's talk about some other ones. And I started, again, I have a very, very weird way of trading. I really do. And one of the things I really picked up, and for you guys who trade, these low flow garbages, I've picked up how like you sit there at a poker table, or you sit there just in general trying to read your opponent and saying to yourself, well, what can he do? What can he do? Can he flinch? Is he scratching his head a certain way? Like, what is he doing that's going to tip off what hand he has? And social media, and again, I'm not saying this to be sarcastic or I'm being, social media is so easy to pick off. Okay, if you know which guys to follow, and when I mean not follow them for trades, I mean guys to follow that are blatant pumpers. I mean straight up blatant pumpers. They tip their hands so easy. I mean, so easy to figure out which stocks they're about to pump. It's not even funny. So by the time they're tweeting on it, you could just sell right into them. So I figured out a way how to pretty much get in front of these guys. And I set up a filter, right? I set up a filter, plug to my man, Dan Merkin of Trade Ideas. But I set up a filter that shows me instantaneous volume on these, low flow garbages. And, as soon as I see the volume come in, I check the volume, I check the float, I check the chart. And if that stock doesn't go down, I know somebody's accumulating it. In the next 5 minutes, once you get that opening range high of that move and that person tweets, and again, I don't want to crap on anybody. God bless them. I wish everybody the best. Once they tweet, man, I'm selling into you guys, just to let you guys know. So the reason why DRAM, I'm telling you straight out, the reason why DRAM didn't go, your boy right here was selling right into you guys. So thank you very much for the heads up. But once I saw the instantaneous volume click right over here, I was selling right into you guys. So I definitely figured out a way. Definitely figured out a way to to kind of front run the front runners, right, guys? So God bless everybody. But again, in this game, you got to figure things out. You got to figure things out. You can use technology for what it's worth, and pretty good cash flow. Pretty good cash flow for something that has nothing to do with your core strategy. We talked about in the live webinar. It's kind of cool. It really is kind of cool. Pretty easy to figure out. Pretty easy. Not all of them. You can't do all of them, but the ones that I follow are pretty easy to tip off. So that was pretty cool as well. Some other names, again, people always ask, how do you sit in a stock that doesn't really give you that big juice. Like here, perfect example. Everybody says this all the time, like from the swing trading side, like how do you sit in a position without having, having feelings to get out? And, one of the things I say is it's all about trend, right? So like, here's an example of stock CGIX, right? So CGIX, I've been long now since here. Right? I've been long this thing since January the 24th. Okay. And I have half my position still, right? And the stock's at 235. Okay. So cool. So I'm along 195. I'm up about 40 cents in the trade. Still have about half of the position left. And people ask me all the time, because a lot of times you can see the stock really didn't do anything, right? So how do you sit in the position? And the one thing I always tell everybody, our opinions don't matter. Okay. It's all about technical analysis. As long as the stock sits in a position, okay, sits in range and sits in a trend and doesn't break that trend, and doesn't break that range, you're golden, pony boy, right? You're golden. Once it starts cracking the range, it starts closing below a very, very important moving average or support in general, then you have to make a decision if you want to sit in the position or not. That's how you navigate a position. The safest way to navigate a position if you're trading on the swing side is using the previous day's high. So for example, so we had JBL, right? JBL as, I'll give you guys two examples, okay? So Friday, okay, and again, for those of you guys who took the stock, I'm not long. I'm not long JBL myself, because again, these New York Stock Exchange stocks really not my thing. But for all you guys who are long, right, long JBL, for example, okay, so had a huge, huge long distribution, right? It broke out above this 25.14 level. The easiest way, okay, the easiest way to navigate this thing is, again, on the most conservative approach, is use the previous day's low. So if you bought the stock on the 25.14 level, okay, 25.15 break, you don't need to be very, very creative. Friday's low, right? Friday's low was 24.90, okay? If it breaks 24.90 on a close, then you get out of the position. Until then, you keep on using, again, right? You keep on using the previous day's low as your stop. If you don't believe me, just use your eyes, right? Look what happened in the last, let's just even say the last 4 days, right? Higher low, higher low, higher low, higher low, higher low, right? So you can, again, even if you don't understand technical analysis, you can understand, right? You can understand and kind of use your eyes that as long as it doesn't take out the previous day's low, you're golden, right? So that's the easiest way to navigate a swing position. You don't need to be in the trade and try to watch every single tick. As long as it doesn't take out the previous day's low. And again, I know a lot of people try to use all these different indicators. It's just pretty much that standard. As long as it doesn't take out the previous day's low, you're golden. Don't make trading harder than it is. Trading is stupid hard, right? Stupid hard. And I've been doing this since 99, man. This thing is really, really hard. Why make it more complicated, right? Why make it? You guys ever hear the analogy everybody uses? KISS, keep it simple, stupid. Well, if keep it simple, stupid was designated to anybody, well, hell, it sure as hell is me. Okay, I am, again, the king of the idiots, so I want to try to keep everything as simplistic as possible. So again, use the previous day's low. Again, same thing with OMDK. We had OMDK on our watch list from Thursday going to Friday, right? And again, I said, hey guys, keep an eye on OMDK. If it takes out this 547, 548 level, it should go, and the stock, look where it stopped. Stop next supply zone at 572. So I know a lot of you guys are long this thing from the 550 level, okay? Friday's low, right? Friday's low was 541. That is your max pain. So your max pain is less than 10 cents in the trade. And if this thing starts reclaiming, for example, this thing starts reclaiming the previous day's high, which was Friday, 572, and starts getting above here, yeah, you can have a massive, massive run. Again, use your eyeballs, right? As long as it doesn't take out the previous day's low, you're good to go, okay? You're good to go. So definitely, just again, make things very, very easy on yourself. Again, don't make anything harder. So for example, Juno, right? Juno. So Juno triggered, okay? Juno triggered on Friday, right? Didn't do anything yet. So Juno triggered off that 2190 area, okay? Only up a nickel in the trade, right? Only up a nickel. I'm not long this thing. Only up a nickel, right? So now what you have to do is use previous day's low. If you're in the stock, so now your max pain on this thing, right? Your max pain on this thing is 2121. Now again, this is a stretched out max pain. So if you're swinging this thing, your next supply is roughly about $24. So you're risking, I mean, realistically, you're risking about 70 cents on this trade to make about $3.50. So again, it's a very, very good risk reward, okay? But again, when you go into a trade, also take into consideration what the previous day low is. And if it's like 80, 90 cents and you can't handle 80, 90 cents, well, maybe it's not the trade for you. Or if you're using common sense, you probably want to scale down your tier size so you can be able to manage the position a little bit longer. But that's how kind of you and I and everybody else, at least that I know, tries to manage their positions. It really is the most efficient, most feasible way without going crazy, without watching every single tick and letting the stock play out organically. So, again, decent spots. So Google was good. IMMU, that opening range trade was good as well. Again, slow and steady wins the race. That's the name of the game, guys. Slow and steady wins the race. And, hopefully everybody is doing well and not doing anything that is outside of their comfort zone. So let's get into Monday's session, and then we will get to exactly what we. So again, Google and Amazon finally woke up off the bottom. And again, I've been saying this in the last couple of videos that we've been sharing together. Again, value comes off the bottom, never the top, hence why Google and Amazon were very, very tradable in the last several days. And again, if you believe in the theory that stocks stop at supply, look where Google stopped on Friday, right? Google stopped on Friday right at the linear regression line, which is roughly that 837 level. So I'm watching this thing I'm watching this thing for Monday. If this thing starts reclaiming 837, look at the gap this thing has to fill. If we continue going higher, this thing has a 20-point gap to fill. So definitely keep an eye on Google. Amazon, same thing. Good pivot this week. That 5-point pivot was very, very good from 820 to 825. It reclaimed, right? It reclaimed the 10-day moving average off that 825. Now look at the gap it has to fill all the way to the next linear regression line, roughly around the 839 level. So again, you have another 12 points there as well. Good value play. So I'm watching that 828 break. Who knows? Maybe you catch $10 on Monday. Good value play. So watching Google, watching Amazon. I like this IVAC, IVAC. I like this IVAC. Good base. Good flag building here. I think a break above this 1020 level looks pretty good. I like this TWOU. Right. I like this TWOU. It broke this downtrend, and now it just needs to confirm. Once it gets above this 3540 level, I think it goes. It paused right at the upper Bollinger Band. So once it got above that 3540 level, once it gets above there, it should go. Again, the risk is very, very tiny there. STX now, we've been watching this thing for like a week, and it's just getting tighter and tighter and tighter. And this sucker is going to go. I mean, it's going to go. If it doesn't go, then we have a very, very small risk in this thing. The break in this thing is still 46.69, 46.70. It closed at 46.46. Your risk here is going to be like a quarter, man. This is a super tight range right here. So keep an eye on that. Kate Spade, there was some interesting chatter on this thing right around here towards the end of the year, and now it's getting super tight, man. It's finally above its range. Guys, keep an eye on this thing. This thing could absolutely go. I mean, as well, a 1945 break can be very, very good as well. Keep an eye on that one. Sienna, another multi-month consolidation, right? Multi-month consolidation. You can see, look how long this consolidation is, right? Long consolidation. Needs to reclaim that 2532 level. And this little small cap stock, I actually did very well with this thing a couple weeks ago, right? I bought this thing like 380 and sold it at 405 like in 5 seconds. So this thing is flagging pretty tight. Again, very, very small float. If it gets above the 410 level, this thing can do well. So again, we pick up little tricks along the way as we go into our later stages in our trading career. The market changes, the dynamics changes, the players changes, technology changes, the way we trade, the way we think, the way we grow, the way we do everything in life changes. So you have to trade with it. You have to change with it. So again, it's just so funny. One of the little things I picked up was kind of picking off these low flow pumpers, and you guys in the room kind of see this now pretty much on a weekly basis. They tip their hats off so easily that you could get these guys and you could get them for cash flow very, very quickly. It's part of the game, right? It's part of the game. So I'm watching obviously all high beta, watching selective small cap stocks. Watching everything, man. Most important thing is, again, guys, stay humble, work hard, have a little bit of luck, believe in God, love your family, be a good person, and everything else falls into place. Guys, have a great Sunday, and with God's help, I'll see you all tomorrow. Take care, guys.